Well, good afternoon, everybody. It is Rob. Hope you're having a fantastic day. Let's go ahead and make sure you all can hear me. If you would please type the number 1 in that chat box, let me know that you can. I would greatly appreciate it. All right, let's get my screen shared here. Let's get a camera turned on. Come on, baby, where are you? All right, there we go. Woo! Afternoon, Kevin. Hey, Brenda, how are you? Brenda and Brenda, both of you. I can hear you. I appreciate that, Elsa. Afternoon, John. Good morning, Helen. All right, Erica, welcome back. Gone for 2 weeks. Happy to be back. I bet. Morning, Donald. Let me start up my drawing tools here. And as I do, let me get that back again. As I do, keep in mind that everything we look at is for educational purposes. Nothing is meant to be advice or recommendations. If you like what you see, make sure you are, as far as trade or candidate, make sure that you confirm that that stock fits your own personal risk profile and risk tolerance. All right. Beautiful. Okay. So lots happening this week. Got Inner Circle check-in coming up tonight, 7 p.m. Then we've got our quarterly, which is a 1 full day, a month, a quarter rather, that we do a live training. I was supposed to be the one teaching this one. I will not be at the Friday one. Sean Reed is going to step in for me. We have my mother-in-law, if you guys should keep her in your prayers, is in the hospital right now, and we're going through a bunch of different stuff with her. So I will not be around on Friday. Instead of rescheduling it, Sean has graciously agreed to jump in. Yeah, it's going to be a great class. Will said it should be a good class. It's going to be great. Thank you for the prayers, everybody. I really do appreciate that. Mastermind group coming up mañana, the 25th. 27th is Trading You. And then we've got some stuff happening next week. Power Hour Trading Coaches Playbook are on schedule. Protect, preserve, and win in uncertain times. Mr. Dale Zamzo. Let's see. Lee, is that in here with me? Yes. Lee, would you please drop in the link to Dale's training in the chat box, please? Guys, you must get yourself registered for this. Dale is an amazing coach. He was one of my original mentors that I had for many things in life, including investment advisory type stuff. Dale taught me some of that. So he is phenomenal. He's graciously agreed to come on in and do that training. So go ahead and check it out. Pop, covered call, E-mini, Vegas spreads, all on the regular schedule. We're not sure what's going on with Friday. That's the only thing. We may have to reschedule the Friday one just because of Sean jumping in to teach on Friday for me. We've got the follow us page. Make sure you're keeping up with everything that's going on. Guys, you can go right over to tradinglikeaboss.com and register for all of these classes. Every one of them, every free training we do is listed right there. Right? So Power Hour, Protect, Preserve, and Win in Uncertain Times, Trading Coaches Playbook. Go back and watch The Key to Be Free. You can go back and watch Brandon's top 3 strategies, right? Crushing with Volatility. They're all in there, guys, all in there. So you can go watch and register for everything right from this page. All right, here's our Trading Boss Manifesto. Learn it, right? You are it, guys. This is where I talk about your one trade away. This is what a trading boss is, right? Our website, tradinglikeaboss.com. This is what it means to be a trading boss to us, right? This is something I lamented over for hours, perfecting every little word, every little tweak, getting a couple of wordsmiths, including one that works for wealth builders, others that are professional authors and just really good with this stuff, much better than I, to tweak on the words a little bit to try to get the right meanings, the right context in there. And you can download this from our homepage. You can download this at the bottom of tradinglikeaboss.com. You should be able to download it at this point at robertjroy.com as well, right? Okay, let's see what we got here. Protect, preserve, and win in uncertain times. I don't want to show that yet. All right, so what trades did you guys do this week? Drop them in. Today, the last couple of days, what trades have you done? Drop those in. I'd love to see them. I'll share with you. I've got mine written down right here. For y'all today, I got 3 of them today. Today was a good day. Today's been a very good day. Let's see. I appreciate that, Brenda. Thank you so much. So John said, Wheel of Fortune, Tesla, CRM, and GME naked puts on Roku, Google, and PBR cash flow. Great job, John. $2,500 today. Today. All right. Phenomenal. Phenomenal. Drop those puppies in, everybody. Give John some kudos for it as well, because that is just outstanding, John. Absolutely love it. Absolutely love it. Erica said, didn't get any trades off today. Darn, trying to catch up after being gone. I bet. PK said today, SPY $150, 2 contracts on MasterCard. I'm sorry, SPY $150, 2 contracts on MasterCard, $130. Nice, good job. You got some kudos coming in there for you, John. Brenda said, awesome, John, no trades today. All right, there you go. John is on fire, PK, does fantastic every week with this. Every week. Wonderful. Wunderbar. Yes. So, all right. So let me go ahead and share with you first what we've got here from Amelia, right? Amelia's got 2 things that she sent into us today. And this is the anatomy of a trade type stuff that she's looking at, right? So on this trade, look at the boxes at the bottom, look at the timestamps. The green one was an entry, right? It was a buy to open at 10:37 a.m. this morning. She bought 5 contracts of SPY 414 puts at $1.69. So that means she needed $169, call it 170, call it $170, and she did 5 of them. You could have done 1 and just had 170 in there, but she did 5 of them at $170 each, right? At 10:43, so 6 minutes later, at 10:43, she sold those 5 for $414. So, right, number 1, she bought the options contracts. Number 2, she had a stop, was at the 13 EMA on a 5-minute candle. And number 3, she sold the 5 contracts at $2.40. All right, so the anatomy of a trade. 29% rate of return in 5 minutes. This was an inner circle chat room trade. So some of you know what that is. Some of you are like, what the heck are you talking about there, Rob? So we have there are 2 primary masterminds that we have. The first one is Mastermind Group, which is open to the masses, right? Not everybody qualifies for it, right? When we do our one-on-one meetings, there are qualifying questions I ask in there, and it has nothing to do with how much money or how much experience you have. Nothing at all. Inner Circle, on the other hand, has everything to do with how much experience you have. There are very few individuals that are offered to come right into Inner Circle right out of the gate. It's usually a stepping stone from Mastermind Group, okay? So 3 days a week, we do a live chat room, which is a trading room where individuals come in, go as they please. We've got it open for 2 hours, a little bit before market. So it's 9 a.m. to 11 a.m., but a little bit before market, and then the first hour and a half of the trading day, right before it starts to slow down. And this was one of the trades that came up in there today. Great setup, guys. Rate of return on that, 29% in 5 minutes. Come on now. Come on, right? Come on. Yeah, it was incredible. Exactly, Erica. There you go. All right, so that was trade number 1. Trade number 2 was a vertical spread. This was on Goldman Sachs. So let's see. She did a bull call debit spread, right? So she got into this trade as a debit of 30 cents. So what did she do? Amelia bought 5 contracts of the 342 half calls and sold 5 contracts of the 345 calls for a debit, 30 cents out of her pocket. What that means is the maximum Amelia had at risk in this trade was 30 cents on this Goldman Sachs trade, 30 cents. So she has a limited risk of 30 cents and an unlimited upside potential, right? Basically, in comparison to what her profit is there, right? There is an upside limit to the trade, but not comparative to what we spent. We had risk in the trade. So that was at 9:32. At 9:37, she closed that trade out for a credit of 30 cents. So basically, she had to put 30 cents up to do this trade. They gave her $1.13 back. So what does that leave her in profit there? 30 cents from $1.13. That's $17.83. 83 cents of profit. 1 contract, $83. 5 contracts, $415 in that trade. No, I'm not that good to do that math. I just did by 10 and cut it in half. Right? That's how I come up with my math for it. Right? Yeah, Jim said very nice. Yeah, it's a great trade. She really does do a good job. Really does a really, really, really good job with it. Okay. So 2 trades today, 2 different setups, 2 different structures. Overall goal is the exact same thing. How do I get into a trade, capitalize on a movement, and get out of the trade quickly? And on both of these, Amelia was in and out very fast. This was 276% rate of return in 5 minutes. Right? Very nice. Very, very, very nice. Let me bring you guys over. Any other trades, drop them in. Yeah, Brenda said, Amelia is my hero. Oh, goodness. You're right. You're absolutely right. Tesla. Why Tesla? Well, 2 reasons. 1, Tesla's always on my list. It's on my power option plays list, right? It's on my top 3 list. Tesla, Nvidia, Netflix. I've talked about this a couple weeks ago right here. This is my list, right? This is my primaries that I look at every day. It also came up today with some news of macroeconomic factors could affect prices of vehicles. Tesla's already been down, earnings bringing them down. What did I wait for? I waited for a break of the fib line right here. If we look at Omega charts, I waited for the break in here. I waited for the retest and the fail. We got a break right here. We came back and retested and we failed. We came down and did well. Now you're going to see something come out sometime in the future of this year. I don't know when. Right now, it's probably going to be 3rd quarter when we release it. My guess is, I don't know. We're looking at something called micro day trading, right? Where it's a strategy that I am very, 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 very hyped up on right now, where there's 2 or 3 quick turn patterns, get in, get out. And we're going to release that to you guys in a video format. It's going to be something very, very, very low cost, right? Kind of an introduction to what we do here into day trading patterns and so forth. So you'll see it come out very shortly, right? This year, you will see it come out using that technique today on Tesla. We were able to get into the option we did the 165 puts, right? As we got our bounce back up in here, we got out. I don't know what my out price was, but it was 575 was our entry. If we look at Tesla right now, I did 2 Tesla trades, so I just got to check it. 165 puts. Right now, they're at 670. So if I got out right now, we would have been up $1, right? We would have definitely done a little bit better than that by getting out earlier, right? But it was a great setup today. Micro day trading strategy, stepped in and said, oh yeah, you need to be out of that trade. And I was, and very thankful and grateful for the setup itself, right? I'm just trying to resize my option chain here because it's way too big. All right. So that was number 1. Number 2, Tesla was a new strategy this morning, and I was looking for a bear call spread. And my note this morning to those of you that watch us in the mornings was bear call spread above 171. So I was able to do the 172 half, 175 and take 50 cents in on that trade, right? That was right out of the gate, basically. So we are way up here. We've got 1 fib line, 2 fib lines to get through, and a moving average, right? Confluence there. So we've got a lot of protection on this trade. There's 50 cents. The goal would be to look to exit that position the same day. We're going to look to see if we can't get out of it today. We'll see what happens in the afternoon. I think we could potentially get some legs on Tesla. If we do, and it does continue to run down, that option could be almost worthless come the end of the day. All right. Charles said, good morning. Yes, Tesla was good to me today once again. Nice. Yeah, Jim said, very, very nice trade, 276% rate of return. Yep, it was great, Jim. She does fantastic. Amelia is my hero. I get it, Brenda. I do. Okay, so that was 2. Third one was the Qs. Right, third one was the Qs. This is SPY. Let's go over to QQQ. So I don't have a lot of room between my pivots, right? My pivot was 316.08. My 0.05 was 316.71. Too tight for me for an exit. So we're going to target 317.34. Okay. So what happened? We moved up. Well, we gapped up on the open, right? Right here, it's an open candle. We stretched back to that 316.08 and we bounced. When we got our bounce, there's the entry. And that was on the first candle of the morning. We were able to buy the 314s, about $2.50. Second candle of the day, we stretched all the way up to that level. We're going to be out somewhere down below resistance. We got out at 330. So we wound up with 80 cents. If you do one contract of this position, actually, let's see, where's my calculator? Right again. There we go. So if we look at cash in was 80 cents. Divided by cash out was 2.5. That's a 32% rate of return for less than 10 minutes. I don't know about you, but I'm okay with 32% in 10 minutes. Considering the average person makes 8 to 10% a year in their portfolio from the S&P movement, I'm okay with that. Very much so. Excuse me. Very, 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 very much so. All right. Let's see. Charles said he had bought the 167.5 at 575 and exited at 9. Thanks, Rob. Charles, did you see that this morning in the training? So you got in the same place as me at 575. I don't know what I got out. But yes, okay. So Charles got this 575 to $9. Call it 6 to 9. He made $3, 50% rate of return on his money today on a trade that I gave away on a free video this morning. If y'all are not watching Market Mornings every day, you are dutzi batso, cuckoo in the head. All right. You need to watch that training that I do every single day. All right. I love the candidates you put up there. I look to trade them first thing every day. Right. And with 30% rates of return and stuff, man, I will take it and be very tickled pink. What the heck happened? Okay, that was flipping weird. Where did TradeStation go? Okay. It's like everything minimized on my computer, including my PowerPoint. Wow. Okay. Beautiful. All right. So we're back. Yeah, it's back now, Eric, right? TradeStation is back. You should be able to see. Let me ask, make sure that it's got the right one. Are you guys seeing the trade from Amelia now? Just give me a 1 for yes. Yep. Okay. Appreciate it. Thank you. Yeah, Jim said if you hold down the Windows logo key and hit M, it'll do this. Now, I dragged the calculator somewhere, and I don't know what it did, but all of a sudden, stuff just started minimizing on the screen. It's like, no, don't do that. Don't do that. Okay. So let's go take a look-see at the SPX. All right. So we need perspective here. Good move for the fib. Strong pullback right down into the 882 level, almost to the penny, and then a good bounce. We're back up near the 4181 we put in a recent swing high right at that 4169 half level. And then we've kind of drifted down from there. Right? On Thursday of last week, we gapped through the 8. We stretched up, failed, closed below the 8. Friday, we opened just above it, small gap up, stretched down, stretched up, closed just above the 8 on Friday. Today, we opened up about where we were. We stretched up towards that 41.44 half level, which our highest high was 41.42. 41. So we're about $2 off of that recent, that fib line, that fibit in there. And now we're falling down. I'm going to put a line and take it right back out again, but I'm watching these bottoms in here. And what am I looking for? A chipping away of the ice. I'm looking for a breaking of the ice, right? The chipping of the ice in there. That's the key, right? Breaking away at that ice. Are we going to see the wick stretch down to that 41.14 level again? I don't care if it closes below it. If we break it, we kind of gave permission to continue to push further. Now, I don't really need it here because we've already broken the 8. That was really the permission giver was right there. But what did we do today? Yeah, Friday today. Thursday, we stretched down, we bounced up. Friday, we pushed back up again. Today, we ran up and failed. And now, is this going to be the failure that I want to see here? I don't know. I do know that it now puts us in a bullish neutral bias with this next fib line right down here, that 40.93 level, that next fib line, which has a confluence of the 21, the green line. That's key right now. That is a key support level, right? That 41, 45 level just above our head, that's the next one, right? And that wasn't the case last week. We were looking at the 41.81, the black line right here. That was the key. That's not where we're at right now. That's not what we're concerned with. That's not where we're nowhere near worried about that now. I've got to get through the 41.44. I've got to get through the 41.69 before the 41.81. 41.81 is kind of a distant memory right now. I'm okay with the pattern we're in until we break and close below the 40.94 level, right? That's where the concern has to start stepping in of, do traders attempt a move up bullish and fail, or do we try to push out from here and take the break to the upside? And here is the biggest issue, right? We are sitting on April 24th. 1, 2, 3, 4. After today, 4 more trading days this month, and then we're in May. Sell in May and go away. We're going to talk about summer trading in just a little while, right? Because we're there. We're there, right? There is a lot of Fed concern again right now. What was the number this morning? So we're going to get a rate hike. I've been saying it since this. No. The last time the Fed was going to cut, I was totally did not believe it. I was very out in the open, clear that I think we're going to see another hike and that we needed another hike. I'm fully expecting another hike now, no question about it. But after that, it was expected we were going to slow down. Even today, just weeks away from that next one, not the one in May, the next one coming up, weeks away from it, there's already a 20% chance of another rate hike. I think it's June, it might be July. I don't know when the next one is after this. I can only keep the next one in my head, right? So there's even a 20+% chance of a rate hike further down the road already for another hike. So we're already gone. The thought of, well, this would be the bottoming of it here, the end of it. Nope, or top, whatever you want to call it. There's still potential of another rate hike. I don't know where I'm at yet until I hear what the Fed says. So I don't want to pick anything for that, which is why you've probably only seen 20% there. But there is definitely a lot out there that could have dramatic effect on what takes place in the S&P over the next little bit. Now, granted, we look at VIX. Man, VIX looks awesome, right? Well, it did up till today, right? Now, even there, are we in fear of getting back into a green zone? Okay, we're not that far off, right? We're at 1750. We stretched up, we pulled back, right? That was on the move, the overall move. But I'm not too concerned with where the VIX is. It's low. So traders are accepting whatever the market's throwing at them right now, as far as fear goes, as far as Fed hike goes, as far as war in Ukraine goes, all of that stuff. Traders are accepting it all, straight through. Tripp said 91.4% of 25 points on May 3rd, 26% of 25 or more points on June 23rd. Jim said quarter rate hike, 91.4%, same number as Tripp. June 14th, there's a 67.9% hike of 25%. So I got different dates, same number though, as far different percentage and different dates. So but I heard around 20% today. So I'm not sure of where the 68 was from, Jim. If it's changed or what. Tripp's got the same number that I did, but I appreciate you guys very much throwing those in there. Right now, the chances there of another rate hike beyond May. 67% in June is no rate hike. Got it. Okay. Got it. 67% chance in June is if no rate hike is in May. Okay. Perfect. Got it. Thank you very much. Both of you. I appreciate it. Danke. Danke, danke, danke. All right. Woo! Let's go and take a look. Prepare for summertime trading. One of my favorite songs in the universe is Summertime Blues. Right? Love that song. Very much so. Man, I am just stoked over that song. Okay. So I already alluded to it, right? The sell in May and go away, right? It's just summertime months are very blasé, very yuck. They don't have a lot of momentum behind them. So better off if you just get out of everything in your portfolio. Get out of everything in your portfolio, okay? And just wait until summer's over and then jump back in again. And you know, September, October, you get good months, you get bad months, right? It starts to pick back up again in September. Kids are all back in school. Everybody's back in work. There's no vacation times, or not as much when people are trying to get to the warmer weather and get away in the nice time of the year. Listen, Florida's probably really nice in, you know, January compared to New York, but I'd much rather be there in, you know, warmer weather where you can go enjoy those beaches and the rides at Universal, and no more Disney, at least not till grandkids, but no more Disney for us, right? And so forth. What's that? Yeah, so Erica, I don't agree with it, but the expression is sell in May and go away. So yes, sell everything before the summertime. That is a market phrase, not mine. And here's why. 3 years ago, I can't give you exact, but I think it's 3 years ago. August, which is one of the worst months of the year ever for our options trades. We usually get 20 or 25 options trades off in the entire month, right? In August, we had our highest ever rate of return month ever as far as P&L went in the history of power option plays. Was there. Actually, I think the two biggest ones were in August ever. So, but what's the difference there? I'm doing day trading. I'm not doing long-term buy and hold, right? Where Meta is just kind of doing this. It goes up a little, it goes down, it drifts sideways, it does blah, right? I'm in and out, in and out, in and out, in and out of the trades. Same day, not per se trying to do 42 trades in a day, but very quick movements, right? When you go back and look, and it's not every year, right? If we go back and look at S&P 500, let's look at a monthly chart. So right here is June, right? So here's May of last year, May, June, July, August. September, we got this gap down. I'm sorry, we got this small gap down, this big run down. And then we back up, and we've been sideways ever since, okay? If you go back and look, here's June. We had a nice run in June, nice run in July. August, we had to move up. September, we had to move down, right? It's kind of sideways-ish. If you go back and look the previous year. So here is May. We had a nice move down, same move up. Then we're in July, August, right? And then we start to bounce in September, right? So sell in May and go away. If you are a long-term investor, then you're not looking at getting out of a position. If you're a stock trader, where you're trying to get in and out of stocks, not using options, then yes, you may want to consider selling off some of those positions, but it depends on your time frame of what you're looking for. For me, I am looking at the options trades only, right? My covered call stuff, I don't close my covered calls out in May. I don't close my diagonals out in May. And I haven't done a lot of leaps, but if I'm holding leaps, I don't close them out in May. And so I'll come back to it in September. It's not the way I approach the overall market, right? Whatsoever. You go back and look. Let's go. 5 minute. Okay. We go back and look at daily. Let's go back to S&P 500. Right? You are still seeing, and this is one of the I need to look at template number 1. One of the things you could be looking for is Wilder's average true range. All right. We're looking for a decrease in the WATR. Now we've had it, right? If you look, we are right now, I can see back to August of last year. Right? I have got, there's a dotted line right here. Just trying to open it up. Horizontal line at 50. Okay. Well, you could see that we have not been below that 50 since November of 21. That's the last time we've been down below 50. Okay. Last time we've been down below 50. And we're there now. What is that telling you? Well, we're moving less intraday. Okay. We're moving less intraday. You can see what went from a very sideways-ish market. We got a quick little pop, this drop now. And then this is where you start to get the meander, right? That's up and down. It kind of drifts off. It pops up a little bit. It only takes 1 or 2 trades to get a decent move in a position. But that to me is where the very short-term get in, get out type trade setups have the highest value to them. And guys, if you have not, see, let me open this up. Give me a second. I don't want to do it on that one. Let's get a different folder. Come on, baby. I'll share it on here. This is 2023, up through and including the end of March, first quarter. Right now, we'll be going over this in depth. We've got Mastering the Trade coming up, I believe, next week for Power Option Plays users. So we'll be going over this in depth. Okay. Well, when you look, right, you look at the number of winners, number of losers, that's all great and fine and good. Apple, we had 11 trades, 9 winners, 1 loser, 1 break even. We made $7,995, $762 a trade. It's okay. It ain't great. It's okay. I mean, I got Roku. That is a $60, $70, $80 stock that we made $1,700 per trade on 10 trades. Right? So Apple, it's not that exciting to me. It used to be before their last split. Now it's okay. Yeah, I like it. It does have consistency to it. Before their last split, before changing leadership, which I don't know if it's the right person there or not, it was a much different company. Right? SPY, we made about $700 a trade, which I don't expect to knock doors down. W-Day was our worst one at $552. We made $3,300. Right? But I could see what the total percent of P&L was per company. And, you know, yes, there are some big numbers. Booking, Chipotle, I would expect them to be their higher price positions. Netflix, 15%. It's our highest one without being the highest price stock. Right, we took 11 trades there, which was also tied for our highest trade. Right, but here's what I'm sharing with you. Bottom line is every one of these trades, we were in and out the same day. Same exact day. Same exact day. Okay? So when you're looking at summer, can you still trade effectively and go after some decent moves? And the answer is yes. Will you get some smaller movements? Yes. Watch Wilder's average true range. Can you use average true range? You can. Average true range, the difference, average true range does not take into account a gap. If we closed at $52 and we gap down to 49, it doesn't take that gap into consideration. Oh, but Rob, that's not the norm. No, hold on a second. Stocks gap all the time, so it is the norm. You may not like the dollar amount at gap, but to me, I want that gap included. But if you don't have Wilder's, it's in Omega charts. If you don't have it, it's okay. Use average true range. At least it gives you a guide. It's close, but the Wilder's I find to be a much better scenario. Yes, and the setting for Wilder's average true range, Brenda, is 13 or ATR. If you're just using average true range, it would be 13. Let's see. Erica said, thank you for confirming. I'm concerned if I should sell long-term shares on Amazon and Google because someone mentioned to me the markets will crash soon. So I don't know if we're done going down, right? We may see a pullback in summer. I think depending on what the Fed does and says, every time Janet Yellen comes out, open mouth and surf foot, we just never know what's going to happen there. I guess the next shoe drop could potentially be the debt ceiling limit, right? That's a big one. It seems like both sides are willing to let us default, even though both sides say they don't want to. I don't know. Again, not good or bad at all, but they're politicians. They're doing what they think is best for them, not what's best for you. Wait, isn't that backwards? It's supposed to be best for you? Yeah, it's supposed to be, but I don't think that's what they focus on. Personal, okay? I think it's what have you done for me lately, right? Oh, you want to make a contribution to my upcoming campaign? Absolutely, we could talk about fixing that for you. Anyway, all right. Sell and may go away? Not necessarily. If you're a long-term holder, then you're going to want to watch your positions. Write covered calls. Markets, if you're going to hold them anyway, write a covered call as it's going down. Write a covered call, right? So you want to cash flow wherever you can. Okay. Beautiful. Let me make sure I didn't miss any comments in here. Go ahead and drop in the candidates you want me to take a look at. Hey, Ed, how you doing? Yep, amen to that. All right, I did not miss. And, all right. All right. Tesla. Go back over to the moving average template. Okay. Fib on Tesla is good. Nothing to redo on fibs whatsoever on Tesla. Not one bit. Okay, it's perfect. This gap down from their earnings says it all, right? We're already looking at that push to the downside, 180 down to 160-ish, right? We chipped away at the ice, and that was on Thursday. We chipped away at the ice on Friday. Today, we chipped away a lot more on the ice. Now, we haven't closed yet for the day today, but if we close below that 162.07 level, right? Move up, retest, fail. Guys, that is what it all comes down to. Can you find a sustainable pattern that will give you an entry, and then you need to manage your exits, whether it is day trade, swing trade, it doesn't make a difference. For me, my target would be 150.5. I don't expect it's going to make it all the way there, but that's what I'm shooting for, right? So 150.55 is the next downside target. The next upside target would be, 162, but 171.5. So Keith said, Rob, wouldn't it make sense to write a covered call and then use the premium to buy puts? Yes, absolutely, Keith. Without a doubt, 1,000,000%. Right? I do that stuff around earnings. So when I want to hold on to a position, I don't want to get rid of it. Earnings are coming out. I may write covered calls and use the premium to buy puts. But more cases than not, I'll just buy the puts to protect the downside and not give any of the upside protection up. So it's kind of a, listen, I know if I play eight hands of poker, I'm going to lose 2, right? So that's kind of one of the hands I know I'm going to lose, right? I know I'm going to do it every quarter. I'm going to buy it for that week. So I'm okay with it. But yes, you certainly could. Okay, what other candidates you guys want? There are a lot of you in here today and very few with candidates. Let's see. Brenda's also asking for Amazon, AMZN, amazing Amazon. All right, so Amazon pushed up nicely to 108. I don't know if I've said it recently, but I do have full exposure on Amazon at this point of where I want to be. So I am very happy with that. Amazon does produce covered calls weekly. So right now, today, if we are looking at a 40 delta, we are on Amazon. We're way down here with a 40 delta for the 109s, and we're looking at $2.50. But that's because they have earnings coming up this week. That's why it's so high. And if we go back and look, following week is just as high, but that's because we wouldn't do it that far out. But that's because of the earnings being here, right? So if you are sitting on Amazon shares, again, maybe not with the week of earnings announcement, but there's great opportunities on them week in and week out, right? Beautiful. Yep, 427 aftermarket closed him, Sid, right there. Sure is. It's an AMC for sure. Aftermarket close. All right. So on Amazon, Brenda, we're looking at 103.60 is the downside, 107.78 is the upside. Okay, what else? You know what? Let me grab my full list of candidates there. All right. Erica's asking for Roku. I love me some Roku. I really do. So you can see here, I showed 2 trades in a row. We got stopped out on Roku for $388. The next day we got back in again and made $3,900 on the put. 20 contracts. This price stock, we do 20. So you're looking at 56 is the first downside target on it, Erica. And on the upside, you're looking at 60.11. So we're kind of right pinned in between that. We've hit the 60.11 already today. So if you were watching and waiting for that move back up to 60.11, if we go here to Roku, excuse me, man, I just can't not get for the life of me. Get caught up to it. You know, I know what it is. I had a really good night's sleep last night, and now I'm exhausted. So go figure. All right, so $60.11. So we stretched up. Let's go to 1-minute candles. We hit it. Where did we close? High closing price $59.99. So we closed 12 cents off of that. We rolled over, and there's the entry. Right? For me, it was 50 cents off of that level, so right about 59.5. So on this candle, right there, which is the closing 1002 candle, is the entry into the trade. So if we go back to 5-minute, 1002, that's this candle closed at 10, this candle closed at 10:05, so it's on that candle. 1, 2, 3, woo, continuation. right? Really nice move down. So if you can get that setup on Roku, again, that's 60.11, that's awesome. If not, downside target is 55.93 at this point. Very good. Hope that helps, Erica. Tech, TECK, Paul is asking for. Wow. Talk about being way off. Okay. Gotta redraw the fibs. All right, so we're in a bullish neutral bias right now. We broke down through the 236. 42.90 is the downside target. 45.25, 49.25, so 4 points. We're going to add in the negative 136 and a 118 here. We're going to need them both. All right. So, Paula, on tech, yeah, bullish neutral bias. Retest the 45.5 down to 43 is the next target. If we break above 47.35. Hope that helps. Let me know down below. Let's see. Tripp's asking for the standard Trip Trio. AMD. Move that sheet away. That sheet away. All right. Possible H pattern setting up here. Well, actually, we did break through today on AMD. So we're looking at 84.16 as a downside target. Upside is about that 90.5. All right. There's AMD. IBM. So on IBM, we've just had earnings come out recently. We're down 74 cents today to 125. So we bounce here. We're looking at about 127.75. If we drop 121.25. But if, for the drop, which I like better, fail, retest, and drop. We can get that, better chance of getting there. All right, that's IBM. And then Micron, MU. All right, so we're looking at 58.75 to the downside trip. There's not much room there. Down on the upside, we've got all kinds of moving averages in the way of that 61.93 level. So I like the downside better, but we're kind of in the middle here. So I would be cautious. I'd prefer it to break the 58.75, the 8 to come through the 21 at least. But get the stock underneath all the moving averages first. All right, let me see what I got here. Make sure these are not. Okay, thank you, thank you, thank you. Okay. So John's asking for Google. Loving me some Google. All right. Not fully loaded on my Google setup yet, on my Google stock. Want to see what this earnings quarter brings for them, which is coming up fast. So I'd be very careful with earnings, but you're looking at 108 to the upside and 102.5 on the downside. That's what I think we're looking at for tomorrow, right? For the earnings. Just keep that in mind. Okay. Hope that helps, John. Exxon Mobil, Keith is asking for. All right. Oof. Nice a bouncer here. Right, earnings coming up on the 27th. I didn't have them today, so I don't know what that bounce was, but they already ran. So either we need to pull back to the 114.5 or break out of the 118.84, retest and bounce up to 123. So if it breaks out, close above, retest, bounce, 123 is the upside. But I would be careful with earnings coming up, right, on ExxonMobil. they could potentially lead the entire market. All right, Donald's asking for SPY and Qs. So downside target on SPY is 408. Upside, we've got that 413 there, but if we could break above it, retest and bounce, we're looking at 418. So break above 413.17. Pull back, retest, bounce, take the entry on the bounce. Which could be intra-candle, by the way. Doesn't have to be end of day. Remember your own personal risk profile and risk tolerance. That's it. Hughes, Yuckville. Downside target is hard. I would do it aggressive, if anything. On Q's, Donald, just because the 21 is almost in the middle of that fib, the two fib lines, the 618 and 764. So on the upside, break the 318 half, retest and bounce, and then we've got potential. But other than that, it's tough. It's tough. Unless you're trading pivots, then I don't care. Abbott, ABT. And that was Trader Will. Need to confirm the fib. Let's go back and look at it, Will, and see what we've got. Oh, boy. So we're going to get rid of this fib. All right, let's bring it in. Let's get rid of those. Let's go back to template number 2, where we have the moving averages. All right. We're in a true bullish bias right now. I love the move that it's made. Well, that's why I've got fibs drawn on it. 95 to 100 is about $5, give or take. We're close, but we're going to add it. Hold on a second. 112 to 115, $3. So we really don't need 12, 15, $3.78. We really don't need a fib it in there. Let's pull it out a little more. So downside is 110, upside is 116, but we are going to have to be cautious of the fact of getting above the 882 on it, Will. All right. I hope that helps. Will's also asking for Expedia. Man, old fib. But we've got fibbits of fibbits in here. So it's time to do a redo. All right. Now, $82, $92, $10. Woo, yeah, we need to split. We're going to add the 136 on 118. Oh, yeah, I'm going to need 882, though. With the black one, since it's a Fibit, not a Fibonacci 4-step. So 87 downside, 98.5 on the upside. Well, hope that helps. A lot of comments, thank yous, and so forth. You're welcome. Jim said, looking at your trading clock and SPY, SPX 5-minute chart, it was amazing how close the times came to possible reversals and the green times. So it is uncanny, isn't it, Jim? Just how well it does work. And we got some new stuff we're doing in here, guys. You're going to see some changes come to the store shortly. This is under stuff, I think. Yeah. Okay. So this trading clock, guys, we really don't promote it that much, right? We got them in stock. If someone picks one up, we ship them out, but we're not going to bring them back in at this point. We're working with someone over in Asia to potentially buy them in the very large quantities, hundreds, maybe thousands. And then we've got a marketing strategy for it. But, you know, what Jim is talking about is the zones here, right? S&P 500 future reversal zones, most active trading zones, danger zones. These zones help us to understand where things happen in the market. What Jim was saying is is uncanny how accurate it was today, that it came to there. So that is cool. Nice, I win the fib challenge. You got it, Will. Tyler saying, can I draw fibs on PARA? P-A-R-A. Sure. Assuming I don't already have them. Oh well. I got them right there. I probably have fibs drawn on 400 charts on my, my trades, my candidates. So we're looking at starting point 8/16 of 22. Let's see. Let me make sure the bottom's there. So here we've got a low of 18, 1792, 17. Okay. So 10/12 of 22 is our low. All right. We'll pull this out a little bit. Little tight for me in here, which is why this was already in the, the fib was covered. It's in the lines, because I won't go back and bother with it if I see that. But we're looking at 2383 on the upside, 2158 on the downside. Hope that helps, Tyler. Trip said, I love it when I redraw first and it matches you. 2 in a row. There you go, Trip. Yeah, Erica, we've got it. I mean, I got it. So I have a meeting, Erica, right after this. It's actually in 16 minutes from now with our web developer. He made some changes to the store. Erica's asking about shirts for women. We've got Wealth Builder shirts. We have Trading Like a Boss shirts. We have hats that we put in there. We had, my guys went nuts. We probably designed 80 or 90 shirts, and with some with sayings on them, but it was way too busy in there, way too busy. I took everything out that didn't say Wealth Builders or Trading Like a Boss. So hopefully next week I have an answer for you. Brenda said, I have the clock. It's cool. It is. It's really good. Excellent. All right, ladies and gentlemen, Lee, do me a favor. Drop that link in for Dale's class, please. Guys, go ahead and get yourself registered to go check out Dale. He's only doing 2 or 3 days and he's done. And we can't get him back for months. So you want to come on and click on that link and come check it out and hang out with Dale as well. You'll see some announcement emails coming out from me over the next couple of days. Make sure you check it out. It's going to show you the closing down of one of our programs. So as you see it, keep your eyes open for it and pay close attention to what's inside. So, all right, there it is. Lee put that in there. I'm going to go for now. We'll leave the room open a couple of minutes. Make it a profitable day. Stay focused on the quest to becoming a great trader. Keep crushing it. And remember, you're just one trade away. Take care, everybody. I will see you at the next update. Bye for now.